You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is noon Central. It is 1 p.m. Eastern. On Friday, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, ever-volatile network upon which so many of you are binging these days. Hope you folks have enjoyed the slew of content coming at you this week. We had some additional content hitting the network this week, of course. A Pro Q&A episode 100 with recurring guest on this show. Hasn't been on in a while, but Mr. Matt Amberson from RHOADS. He was on our first one, so we thought we'd bookend it. He'd come on episode 100 as well. And because it's episode 100, we made it a free and open and available to everyone. So you got to join the live stream. You also, of course, got to hear it on the on-demand side. So I hope you guys and gals enjoyed that glimpse into all the fun that we have going on over there on the pro side. If you want to check out the other 99 pro Q&As, we've had some great ones. You know, Scott Nation's a creator of VOLQ out there. Tony Sliba, you name it, Mr. Once and Future Dr. VIX has rotated through there once or twice. In fact, the trade we're going to talk about a little bit later came from one of our pro Q&A sessions, and it's been just a endless tree of giving throughout all of this year of volatility as a result. So a lot to unpack there. So again, 100 pro Q&As waiting for you already when you get there. Nearly 100 options oddities, plus a bunch of other exclusive stuff and early release stuff you guys get on the pro side. Plus, of course, live access to this, everything else we do out here. Plus, the giveaways, the pro trading crates, which are pretty freaking awesome, and no small expense unto us to put those together and ship those out to you. But hey, we like you folks, so we do it all the time. Theoptionsinsider.com/pro is the place to go to sniff around on all that goodness while we go sniffing around the panel, see who's joining us on the old program today. First, joining us once again from the Southern volatility mecca known as Austin. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. It's a lovely day here in Austin, nice and sunny and pretty. Yeah, I'm just kicking back, enjoying my Sergeant Slaughter action figure and watching the market decide what it wants to do.
Nothing better than watching the markets with good old Sarge, right? Is he out of the box now? Is he breathing?
No, he's staying in the box.
Oh, okay.
He is staying in the box.
To each their own. You know, I'm an out of the box guy, but you want to keep him in there. That's your prerogative, sir. It is your major award at the end of the day. And of course, also joining us, beaming in. Not sure where he's coming in from. If he's coming from the Chicago hinterlands, if he's down in Indiana near the old School of Business, maybe he's somewhere around the globe. I guess we'll find out. He is the aforementioned once in future and now present Dr. VIX, a.k.a. Mr. Russell Rhoads, holding court down there these days at the KELLEY School of Business, teaching them youngins all about volatility as well as CAPM and all that goodness. Mr. Once in Future Dr. VIX, welcome back to the show, sir.
As always, very happy to be here. I'm in the western suburbs where I probably am going to be all summer.
I can't imagine a
I
lot
got
going
stuff
on.
to do, so I've decided to stay away from airports and plant myself here and either get caught up or call it a career. I haven't decided which direction I'm going yet.
One of the nice things about the collegiate side, they don't really do much in the summer months. You get a nice little time off there. They don't work post May 15th if they can avoid it there in the academic circles. But you know what? The work never stops here on Volatility Views, so let's get going right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a volatility, trading, and trending, and analysis and unusual activity. It's about every way you can carve up the volatility onion. We do it here on the show. And kicking off the start of the show, we are seeing markets slightly in the red, a little over 0.1% in the S&P, about 0.25% in the Dow, and a similar percentage in the NASDAQ. So one of those rare days where all three indexes moving in the same direction, even if ever so slightly. It's not one of those days where Dow's doing its own thing, S&P is kind of hanging out unched, and NASDAQ's moving completely in the opposite direction. We have seen a few of those of late as well. So not a heck of a lot of movement lighting things up to start the day, which means once again our vol friends taking a bit of a respite, even if they are bouncing off the lows here. And we did get pretty low earlier in the session out there in VIX cash land. We actually broke the 16 handle ever so briefly, hit about a 1585 before saner heads prevailed and took it back up about a point to where we start the show right now, right around a 1680 when we kicked off the show. That's still down from last week's show, down about 0.8 of a point, but also up almost a full point from the nadir that came in earlier this morning. So they were coming for vol earlier in the session, even though vol still hanging out fairly frothy at about a 95. That's still down, but only down about 3 points from where it was this time last week. And of course, VOLQ, the at-the-money vol of the NASDAQ, hanging out at about a 17 when we kicked off the show, down about 1.25 points from where it was this time last week. We will start now with our guest, sir, Mr. RHOADS. An intriguing week. We'll get to all of your adjustments and rolls in a second. But before we get there, sir, what's lighting up your tape in the world of volatility this week?
I was looking at the term structure on the June options, just to go from very basic to much more in the weeds. But it seems to me like it looks like the market's prepping for something, and I don't know if it's the debt ceiling or what, but it looks like the market's a little nervous about what may happen in equities the next couple of weeks. And just taking a look at out of the money calls on VIX, and I know, and what made me look there was how VVIX behaved the week before relative to VIX, where VIX was down and VVIX has been at relatively elevated levels. I know that's coming back in now, but that's kind of the thing that's got me going, wonder what the market's thinking there.
You got to wonder, it probably is the debt ceiling. Does seem to be the big albatross hanging over the neck of the market right now, even though there have been some conciliatory headlines on that front. But still, if there's anything big in that time frame, you would probably have to assume that's it, unless there are some major lingering earnings still in that exact same time frame that they're pricing in as well. Even the most optimistic of the FedWatch folks didn't have any sort of cut action coming really until about July. Even that was kind of crazy, as our audience said. Nearly 90% of you, I think, said that was insane to cut rates starting in July. So glad to see we have saner heads prevailing in our audience. Mr. Meatball, same question for you. What's catching your eye out there? And did you notice the same thing that Russell noticed, this aberration around that expiration cycle?
Yeah, for sure. And yeah, I definitely noticed vol perking up. We're barely down, and the VIX has really woken up. VIX futures have really started to move. the spread between the cash and the futures is a mile wide, which tells you, and we all know who usually is right on that trade. But yeah, I'm a little bit, we really have seen things wake up, and there is a ton of activity in VIX options today. Just some pretty big, huge prints going up on what had been a relatively slow week until today. But today is definitely going to be a strong volume day for VIX.
Since you mentioned the futures, let's jump out there now, because on the show last week, I believe it was myself and the Rock Lobster and Kevin from NASDAQ, and we kind of remarked on just the steep contango we had going on out there from that front month all the way out to not even the back months, just to October. It was extremely steep slope out there for the term structure, which was kind of interesting. I think it was Andrew pointed out we haven't seen something like that, since the crazy days of 2020. It seems like that was a signal to buy some Qs because NASDAQ has had a nice little run since then. So there you go, listeners. VIX futures contango, VIX futures slope, your key indicator when out there slinging the Qs. Coming into the start of the show, obviously we have May rolling off the board. June now in that pole position there. It's down a little over a point, about 1.25 points from this time last week. So obviously they have come for that juice, which again, no surprise. The July future is off a little over a point as well, about 1.15 points. And you're right, Mark, it's a huge chasm, about a little over 3 points right now between the cash and the June future when we kicked off the show, that's enormous. That's a huge gulf out there. So maybe we'll start there. Mark, was last week the week to buy Qs? Is that your new signal now, this term structure of VIX futures? Is that your time to buy Qs? And what else is catching your eye out there, including this crazy abyss between the cash and the June future, sir?
Yeah, I mean, well, the run-up has not really been a run-up. If you look at kind of all the sectors as a whole, we're flat to down on the year. It's been 6 stocks. Apple, Amazon, Google, Meta, Microsoft, and NVIDIA, notably, have just gone parabolic. NVIDIA in particular have just gone parabolic straight up, and has basically forced the market higher with it. The rest of the market, though, not as hot. I'm looking at retail getting absolutely demolished today. Oil was stronger in the morning, but it's pulled back. Consumer discretionary, consumer cyclicals looking weak. The market as a whole, it's trying to stay bid, but you have to wonder how long can 6 stocks hold up an entire market. I mean, Apple and Microsoft are bigger than the stock market of Canada. To put that in perspective, that's how crazy the valuations have gone. And those 6 stocks now make up like 51% of the triple Qs, which is insane.
Yeah, just insane times. We have been saying that for a while. How long can this continue where you're right, Apple and Microsoft and NVIDIA strap the rest of the market to their back and say, hold on, kid, here we go. I mean, NVIDIA is closing in on a 200 PE. I mean, we're getting back to those levels, and yet these things are just racing north. You just whisper the letters AI into a fund manager's ears, and he's like, bye. Gotta get myself some of that juicy NVIDIA at a 185 PE, whatever the hell it was yesterday when we were talking about it on the show. Mr. Rhodes, same question for you, sir. What are your thoughts on the term structure? The fact that steep contango may have been a bit of a buying signal out there, especially in tech land. And also, as Mark pointed out, this extremely wide chasm between the cash and that front future. So a lot to unpack in the term structure this week.
There's a whole lot to unpack there. I'm going to take that last part first because it's something I've been focusing in on. And I'm like an open book on this program, and I know that I've said a few times on your network that I was long NASDAQ. I bailed on that a couple of days ago, partially based on what Mark Sebastian was just talking about, but also I feel like at minimum some of the other stocks need to be playing some catch up, especially small cap stocks, which are basically still down on the year. Even though, the NASDAQ's up like 20% and the S&P's up like 7 or 8% or so. So what Mark was just talking about most definitely has been showing up in the broad indexes as well. So I swapped out my NASDAQ long for short S&P long RHOAD. And we'll see how that works over the course of the summer. We do have one of those. I think the June expiration cycle is a 5-week cycle. And that can have somewhat of an influence on, the elevation. But still, the VIX future up above 19 at about a 230 premium relative to spot VIX, especially going into what is traditionally a quieter time of year. I say traditionally because there have been years that gets offset a bit. It's just pretty interesting to look at that. And then not necessarily the term structure, but just after I talked about the options, I took a look at my live vol screen, and they have a general implied volatility measure for the different expirations. And right now, the June one is at 85 implied vol, July 78, August 72, September 67, October 63. So yeah, if we make it through the first couple of weeks in June, we may have a pretty cool summer. If we don't, look out below.
It's already too late to sell in May and go away, sir. We're already past that point now. But intriguing stuff here. It's hard to believe we're already deep into May here. It doesn't feel like this year is just flying by at an accelerated pace. The show also flying by here, listeners. Having a lot of fun, though. I mentioned it earlier in the show. Let's get to it now, listeners. Mr. Rhodes has been tracking this ongoing saga in VIX land. It all started, I believe it was the end of last year, beginning of this year, with a pro Q&A session he did with our pro members. One of our pro members asked him, how would you prepare for or hedge against a spike in VIX over the next 6 months? And that just opened the floodgates to this ongoing saga that has been the upside trade in VIX. And Russell, to his credit, has been tracking it and rolling it diligently month after month out here. We are coming now into the final month here because the question was for the first 6 months of the year. Clearly, we have not had the upside explosion that the listener was interested in and or afraid of. So this upside trade, not going to be knocking the cover off the ball, really. But then again, that wasn't the point. Russell never sat down and said, I think the VIX is going to explode in the next 6 months. It was really more along the lines of, if it happens, and if you believe that's going to happen, here's a way you could do this. So, Mr. Rhodes, it has been a fun saga to watch. I'm sure you've had fun rolling and adjusting and tracking it all. It makes for some good content on your Substack there. Why don't you catch us up, sir? What were your latest trades and how's it looking up to this point?
Yeah, I don't know what I'm going to write about after June expiration.
You might have to do upside trade part 2 for the second half of the year.
Well, somebody's got to think that it might happen. It's going to, what I think will be really funny. Let me remind me to say what I think will be really funny. I don't want to jump ahead. So basically it was, I was on the pro Q&A on December 8th, and somebody at one of the, after my head injury, I'm terrible with names. But one of the regular listeners whose names I kind of recognize.
I think it was Tony. I think it was Tony P.
Yeah, I think it was Tony. It just said, how would you position yourself if you think in the next 6 months there's going to be some sort of volatility spike, which would also mean that we get a shock to the equity market, which of course we have not seen. And so one of my favorite structures around that is selling a put spread and using that credit to buy an out of the money call. Which did work once. It worked in March. We had a little bit of an elevated on the rolling date. It just turns out that VIX was at an elevated level, and I was able to roll that one for a profit. But I've done variations of selling a put spread and buying a call, or selling a put spread and buying an out of the money call spread, depending on market conditions. In fact, one of the when we were just talking about what we're seeing within the market, when I rolled this trade last Friday from May to June options, I sold the 19 put, bought the 16 put, bought the 24 call, and sold the 35 call. Actually got a premium out of the 35 call to go down a couple of strikes on the long call, and was able to do that for a nickel credit. No, that was the 1, 2, 3, 4. That was the 6th rolling transaction. The worst trade was using the January options. Ended up losing 280 on that one because volatility was in the dumper back then. Did make 235 off of using the March options on the roll date. And the roll date's always the Friday before expiration, which is why we were rolling to June last week. The running P&L is a loss of $5.59 per spread. What I think will be funny, which I was going to start with, is just watch us get a spike to the low 30s.
The second you take it off,
get out of this thing at about $5.60.
I was going to say right after you take it off. It'll be early in the July cycle.
That's the other one. But this is something. If you were going to do this is something that you would do really based on some tail risk in an equity portfolio. And of course, the S&P 500 has done fine this year. So if you, in a portfolio context, it's just cost you a little bit to have some tail protection. But on an absolute trading basis, ain't worked so well, which, for hedging trades, you tend not, things that are used as hedges, you tend not to think that they're going to do particularly well when, unless you needed them, and we really haven't needed it yet. Maybe I should be rooting for the debt ceiling thing to cause a whole bunch of global.
There you go. Then you'll be we're sitting in the green by the time this is all said and done here. So nearly $6 to the red. But interesting that March cycle, you did get a little bit of a pop there. Intriguing stuff. So if you haven't checked it out over there on Russell's Substack, listeners, he lists all of the dates and the rolls and the strikes and the entries and the exits. It's effectively a short put spread to finance some or all of an upside call strike, and doing that month after month there. And again, March looking pretty good. The rest of them, not so much. We haven't really had the upside. I mean, in a cycle when we're kissing a 15 handle in VIX, the upside spread trade, probably not going to light the world up. But you heard it there, listeners. You heard it. He's wondering what he's going to do for the second half of the year. So one of you in the pro side has to ask that question the next time we have Russell around the pro Q&A. And then it's official. Then he can officially continue his saga throughout the rest of the. I see you in there, Option God. Is there a Russell's Weekly Rundown today? Yeah, we'll get there. Don't worry. We'll get there. We'll get to the fun music in a bit. We're not there yet. You guys get ahead of me sometimes here on the show. Let's keep on rolling. Since you mentioned VIX options, we will get out there now, listeners. And as the meatball alluded to, bit of a busy day. It's been a bit of a busy end to the week. This time yesterday in the option block, we were already north of 1 million contracts in VIX, no small part due to that pretty sizable spread roll. We'll get there in a little bit. Today, though, no slouch as well. 776,000 contracts on the tape. That's pretty much the ADV. The ADV is 787 right now. That's up about 30,000 contracts from this time last week, and we're already there. So I got a feeling this time next week that ADV is probably going to be above 800K. So we're getting back into that frothy time there, listeners, when VIX can maybe threaten 1 million contracts a day and do so consistently for quite some time. Let's break down what are the size positions out there in VIX land as well. Then we will unleash Dr. VIX on his near-dated contracts. First, before we do that, the top 10 right now, 9-1 calls over put still. We've been hanging out at that level for a while, and that remains the case again this week. Let's see if we can play Where's Waldo and find the put together. All right, coming in at number 10, we have 179,000 of the June 35s. Number 9, here's Waldo, 182,000 of the June 15 puts. Again, our first and only put in the top 10 this week. Number 8, 188,000 of the Sep 35s. We'll come back to that in a little bit, listeners. Number 7, 192,000 of the July 25s. Number 6, 196,000 of the June 23s. Number 5, 220,000 of the June 25s. Number 4, 298,000 of the August 60s, 6-0s. Number 3, 305,000 of the June 40s. Number 2, 321,000 of the Sep 60s. And the number 1 size position, a little bit smaller than it was earlier in the week. You will see why soon, listeners. 432,000 of the June 30. So that June 30-40 vertical, which has dominated ROI for the past few months, coming down a little bit this week. So I have more to say about that. But before we get to that, our listeners are champing at the bit. They can wait no longer. So it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right. Yes, I know. Got to do it twice. Once more, listeners.
Now, Russell's Weekly Rundown.
Now, I pay all that money for the theme, Russell. I got to get my money.
No, it's a tune that's so nice, we're going to play it twice.
Exactly. I play it sometimes at night when I'm going to bed just to hear it and chuckle.
Well, and you don't know this, but my oldest daughter's graduating high school. Good Lord, I'm old. On Thursday next week, and I'm bringing a bullhorn, and I've got a recording of that. And as she walks across the stage,
just play that right as she steps onto the stage.
Where did she decide to go to school?
She's going to go to George Washington.
Oh, good. That's a great school.
Congratulations, sir.
To GW. I know she looked at your alma mater. We went to the awards ceremony last night, and one of the best students from Bennett is actually going to do business at Villanova.
No, good for them.
Congratulations to you and your daughter, and my condolences to your wallet, sir.
Oh, goodness gracious. Don't even get me started. Okay, so let's do some weekly rundown stuff. So Monday, a lot of early week stuff was focusing in on bullish trades with the May 24th options. Monday, somebody bought 500 of the May 24th 19 calls for 95 cents. Or May 24th calls for 19 cents. For 95 cents. Goodness gracious, the concussion's not good today. Tuesday, somebody bought 1,900 of the May 24th, 30 calls and paid a dime. Somebody's really, if that trade pays off, I'll be done writing on that other trade. Then Wednesday, in a few lots, somebody was selling the May 24th 18 calls. They sold at prices between 90 cents and 75 cents. Ended up selling about 1,000, a little over 1,000 in a 500 lot, 316 lot, and 260 lot. Somebody sold, and this is a funny trade. Talk about picking up pennies, not even nickels, but pennies in front of a steamroller. Seller of 455 of the May 24th, 42.5 calls. We have not seen that level since the COVID scare. And they took in a whopping 3 cents on that trade. Part of me is hoping that they're closing along on that one. I couldn't back into that. And then somebody also, and this is a pretty interesting trade that maybe if we want to kick around one of them after I'm done with the list. Somebody sold 900 in 3 lots of 300 of the May 24th 30 puts, and they took in $11.50 each for those. And the funny thing was the spot index at the time was like at 1820. So they were selling these with negative time value relative to the index that it'll settle in. Don't like that trade. And there should be a little disclaimer. Just because I'm reading these doesn't mean I like them. Finally, we're going to get away from the May 24th expirations on Thursday. And a few lots that takes us up to about 1,300 contracts. Looking at the Jan 7th, 1720 bull call spread, they paid between $1.09 and $1.11 for those. So we'll call it $1.10. Get VIX up above 20 in early June. And this is a trade that I do think is targeting the debt ceiling. Maybe even just the anticipation of the debt ceiling and not, maybe get out of it before, there's a resolution or not a resolution. If we start to get close to the deadline and the market starts to work its way up, VIX market starts to work its way up. This one might pay off fairly decently. Also on Thursday, somebody told in 2 lots of 249 each, nice round number, somebody sold 498 of the June 14th 17 puts and took in 45 cents on those. And then today, this morning, somebody, and I kind of like this one, somebody bought the May 31st, 2830 bull call spread, and they paid a nickel for it. I don't think it'll pay off, but, right now I like that trade for a volatility spike better than the thing I've been writing up.
What were the strikes on the last one again?
2830.
2830.
Yeah. I mean, that's just to backtrack, we didn't really talk about what my exit strategy was on that rolling trade. It's VIX in the 30s. If we get VIX up in the 30s, then I think that's when you take the thing off. And I really do think it would pay between $5 and $6 if that happens this time around, which would make it break even.
You'd be scratching on that bad boy. I don't know if that your friend is going to be scratching on those May 24th 30 calls. That might be a bit of a bridge too far. Intriguing for a dime on those. That's all sorts of fun going up in the weeklies out there this week. Listen, a little bit of something for everyone, which is what Russell's weekly rundown is all about. You want to pick up nickels in front of the steamroller, you want to swing for the fences to the upside, whatever you want, you got something for you out there. Let's see if we got something for you on the big dog options this week. And the answer is probably. There's a lot of paper going up, including today, like we said, already 776,000 contracts on the tape today. Today, another pretty hefty day that's not really driven by a lot of underlying action out there in the VIX. The big dog today, 101,000 of the June 27s. It seems like there's some funky multi-leg spread / roll going on between the July 24s. 70,000 of those. That's number 2 out there. And this 100,000 of the June 27s. And a whole bunch of other stuff going on the July 21 strike. 30,100 times for the puts and the calls. All that fun going up kind of together. Plus the June 23 puts. So all kinds of stuff going on out there today, which is to account for the tsunami of paper out there. Again, in fact, all of our top 5 is pretty much tied up in that one trade. Number 2, like we said, 70,000 of the July 24s. Number 3, 45,000 of the June 25s. Number 4, 44,000 of the June 20s. And rounding out the top 5 today, 40,000 of the July 17 puts. Yesterday, the big dog day of the week. We talked about it a little bit on the option block yesterday. 1.23 million contracts on the tape. Weirdly enough, we were almost at that level by the time of our show yesterday. So not a ton of paper going up in the second half of the session. It really was all this funky spread. Looks like a bit of an unwinding of our friend, the June 30-40. I mean, there still is size paper there. But the big dog yesterday was this June 30s going up 162,000 times, followed by number 2, 128,000 of the SEP 45s. Number 3, 127,000 of the SEP 35s. Number 4, 124,000 of the June 40s, and rounding out the top 5, 56,000 of the June 25. So it does seem like there was some rolling action out of the June 30-40 and into the SEP 35-45. So not only are they getting out of June and going out another 3 months, which I know Russell loves, but also going up 5 handles, which is kind of interesting. So I guess they got enough of what they wanted at the 30 strike. They don't need to go there again. They go 35 this time. We all know how well that vertical paid off, but intriguing stuff nonetheless. Obviously, there still is size open there. So it is kind of intriguing to watch what they'll do with the rest of it out here. Wednesday, 816,000. So really, there weren't any sleepy days this week. It was a pretty dense week, all week long week. Listeners, the big dog on Wednesday, 57,000 of the June 17 puts. Folks really love that 17 put strike, kind of across the board. June, May, July, pick your poison. It's been pretty popular. Behind that, number 2, 53,000 of the June 20 puts. Number 3, 40,000 of the June 19 puts. Number 4, 31K of the June 35 calls. And round out the top 5 on Wednesday, 29,000 of the June 18 puts. Tuesday, back up over a million, 1.12 million. So multiple 1 million contract days. Obviously, today not done. We could hit that again today as well. So that could be 3 in a week. That's a lot, listeners. The big dog on Tuesday, 189,000 of the AUG 60s. Are we back on that train, listeners? Is it that time again? Number 2, 67,000 of the AUG 40s. Looks like some action. Could be some more of our old 1x3 friend. It does kind of line up pretty close to that there. Number 3, 43,000 of the June 25s. Number 4, 42,000 of the May 17 puts. Our old friend, the big trade of the week last week, taking some off the table, maybe doing some last dances there before expiration. And then the number 5 contract on Tuesday. Here we go. 35,000 of the AUG 110. So there we go, listeners. If the AUG 60s, not quite, shall we say, optimistic enough for you, allow me to present the AUG 110. That's the first north of par strike we've seen in a while, which, again, that was all the rage this time last year, listeners. And then Monday, also not a sleepy day, 717,000 contracts on the tape. The big dog on Monday, 64,000 of the May 17 puts. Again, our old friend there. Number 2, 37,000 of the May 19 puts. Number 3, 32,000 of the May 20s. Number 4, 31,000 of the June 35s. And rounding out the top 5 on Monday, about 31,000 as well of the June 21s. Mr. Meatball, there was a freaking ton, I think is a technical term, of paper out here this week. We'll start. What are your thoughts on this June 30-40, maybe rolling out to the SEP 35-45? And then anything else catching your eye out there this week? Maybe these AUG 40-60s, or what the hell is going on with this multi-leg thing going up today, sir?
Yeah, there was this huge trade. The one that caught my eye was the one that went up today. It was a big, huge trade. 70,000 of the July 24 calls, 72,000 of the June 23rd 70 calls, versus a bunch of put sales and some other call sales. So like a giant strip went up of, basically, I think it's a roll, but they were, basically taking, rolling out of June and into July to, put on, basically be hedged. I wonder if they're just, exactly what they're doing, but it was some sort of a pretty decent sized roll. Oh my, I mean, it's big. That's where all the volume came from. This one trade was, let's see, 25, 50, 110, 180, 250,000 contracts on that trade. So nothing to sneeze at.
Yeah, that one is pretty impressive out there today. What are your thoughts also on them maybe taking the June 30, 40 and going out to September and saying, let's add a few strikes. Let's go up to the SEP 35, 45. You like that even better, sir?
I mean, it's definitely it's a roll, and they're looking for, they're just buying time, which is one of the things when you're using VIX, you're constantly buying for time, and that's what they're up to. And they're trying to keep their costs down, so they adjust their strikes. I don't think there's anything too deep on it, but certainly interesting.
I am looking here while we were talking here, and I was right. Looks like that on Tuesday, that big active day, the AUG 40-60, that was related paper. I do see here about 25,000 of the 40s going up against, at the time, it was 150,000 of the 60s. Obviously, they came back in and did more 40s, a little over 2x of that. But here, interesting stuff. Looks like they could have bought one and sold 3. Interesting. And that was indeed opening on the 60s. Obviously, a little more paper there on the 40s. So intriguing stuff there. Maybe we are starting to get back into the ratio vertical season. I hypothesized that a few weeks ago when we saw that SEP upside, listeners. Usually we see it the other way, selling one and buying 2 or 3. In this case, looks like it might have been buying one, selling multiples to the upside, but I'll have to go dig in a little more to find out. In which case, obviously, they have something else against that, listeners. Probably some futures, something else along those lines. But intriguing stuff. We are kind of beaten down, so you could see that as a bit of a quote-unquote stock repair type trade, even though starting at the 40, going to the 60. Intriguing strike selection, if that is indeed the MO out there. You like those, listeners? Any of these trades resonate with you? Any other trades resonate with you? Maybe you want to send in for us to discuss here on the show. You know where to find us. At Options, most of the major social media platforms. Questions at theoptionsinsider.com also works. Of course, if you're on the live, you can also hit us up. It's like Option God saying he loves Russell's theme song. Yes, we all love Russell's theme song. It is the real reason we do the show at the end of the day. All the other stuff is just bonus. Let's get to some of that bonus right now. Let's go out to the land of the VIX ETPs. SVIX, our inverse friend, how high did it get this morning? It got to the high for the year of about 20 3/4 this morning, listeners, when we were kissing that 15 handle in VIX. Obviously, retreating off that a little bit now. Still up on the week at about a 1980 right now. It puts it up about 0.8 of a point from where we were this time last week. In terms of paper, we have not seen the revolution in SVIX paper that some folks hope for. A little bit better today. They're closing in on 1,000 contracts, about 950 right now. The ADV also moving ever so slightly in the right direction, 1232, up about 100. Well, let's look really quickly, see if any interesting paper going up out there today. The big dog today are 250 of the June 9 puts. So we're going back to all that kind of paper. Looks like paper blasting them out And it's all opening. So opening line in the sand looks like on the June 9 puts. I'll have to see how much they sell in those June 9 puts for. They got a whopping dime for those. So you like those June 9 puts in SVIX? For a dime. What level do we have to hit in VIX for SVIX to threaten the 9 handle? Intriguing stuff there, listeners. Right now, in terms of big positioning, not that dissimilar. The big position in VIX, or I should say SVIX options right now, about almost 2,000 of the May 8 puts. Those obviously going the way of the dodo today. I think I can go out on a limb and say probably not going to threaten those today, as they're threatening a 20 handle right now. Right behind it, we have 1,800 of the June 8 puts. So folks loving themselves a little bit out of the money put strikes out here in SVIX. But Russell, I know you've been a fan of SVIX for a while. You like the underlying and occasionally slinging a little bit of the old covered calls. Anything catching your eye? You up to any no good out there in SVIX these days?
I'm not up to any no good. I've got some 19 strike calls that expire today, so it's probably got some of it's going to get called away from me, and I'm fine with that. I really wish we had weeklies on this thing. And I do think it would help. I do think it would trade if they had weeklies on this thing, because it trades about 2 to 3 million shares a day, just on a regular day, without a whole lot of option related activity. I don't know what the holdup is here with respect to give us more alternatives with option trading around this guy.
Yeah, every time I pull it up, that's my first thought as well. In addition to, man, I wish these spreads were tighter, is also, wow, yeah, a weekly would go so far. It would really just open up the cabinet of options, pun intended, out there for what you could do in SVIX, as you are so limited. How many people right now want to tie themselves down to a month-long contract out there in SVIX? Clearly not a lot. The ADV, only about 1,200 contracts right now. Mr. Meeple, anything catching your eye out there in the inverse land this week?
Well, it's had a nice run, and then now it's pulling back again. This might, I'm hoping we get a little bit of a sell-off here, and I can scoop some up, because this has been a fun product to get in and out of.
Yeah, another argument for the weeklies. You're right. It's a very short duration type of trade product, unless you're Russell and you're buying and holding it for life. The man loves it.
Holding it for a while. I've always been long it ever since it launched.
I'll say you've been long pretty much for as long as I can remember. So yeah, you're loving this bad boy.
Yeah.
Pull it from his cold, dead hands, his SVIX out there, Mr. Rhodes. Let's go out to its sibling product, UVIX, on the levered side at about a 970 as of a few minutes ago, down a little over a point, about 1.1 points on the week. Same deal for UVIX, 9,500 contracts. So the ADV moving in the right direction. It's up about 1,000 on the week. As for today, we're actually at 15,000 contracts today. So some stuff is trading. The big trade out there, the 9.5 calls going the way of the dodo today, 2,300 of those going up, as well as about 1,700 of the 9.5 puts also expiring today. So you got about 4,000 contracts going up right there, listeners. So intriguing stuff. The big position in UVIX right now, about 3,500 of the May 10 calls expiring next week in the weekly. So intriguing stuff out there. UVXY, it's hard to say anything is intriguing out here in this product. They stubbornly, some might say foolishly, refuse to reverse split this thing. So it continues to erode. 320 down about 0.3 of a point. The ADV is about 174,000. That's down another 2,000 this week. And they're pretty much at that right now. The volume today, 173,000. So they're at a very anemic ADV. This used to do a lot more paper, obviously. So clearly there needs to be a little bit of an adjustment out here. The big position out there today are 42,000 of the May 3/2 going away today. Those are a bit of an ouchie. They were looking good last week. This week, not so much. So yeah, UVXY, even though it is still a pale shadow of its former self, continues to be a heartbreaker out there. Let's go on out to VXX. Was at about $36 when we kicked off the show, and it's still right around there. It's about 36.10 right now. That puts it down about 1.7 handles from where it was this time last week. In terms of paper, it continues to slowly try to claw its way back, really, from the abyss. 45,000 contracts on the tape so far today. The ADV is only 42,000, so they've already exceeded that, even though it is unched on the week. No new ADV crawling in this week. The big position out there remains about 12,000 of the June 80s. These are the VXX1, so the pre-split adjusted. So caveats apply to that one. You don't really want to trade those if you don't have to. Not a ton of liquidity to be had on those. Followed by number 2, about 10,000 of the June 20 calls. Mr. Rhodes, in the past, we have taken shots at VXX, not without merit. This is a product that has had many problems of its own making. So it kind of deserves all the slings and arrows that have been sent its way. But that said, it is starting to do what it's supposed to again. So I'm curious for you. Are you back on the VXX train at all? Are you watching it? Where do you stand with this thing?
Well, I watched it and I noticed that the volume had started to pick up on it. When I write up my weekend stuff every weekend, I take a look at the ETPs, and I do check in on the volume periodically to make sure things that weren't trading particularly well, are they starting to trade better, et cetera. So, maybe there are enough new people that don't have a memory of VXX that are coming into that market. So that might be what's happening there. Just to roll back one instrument, you were talking about UVIX. Looking at the term structure on the options, the June 2nd and June 9th are much higher than out of the money calls, have much higher implied volatility than pretty much all the other expirations. So again, everybody fixated in on the debt ceiling.
Indeed. If you're not watching debt ceiling and all things macro, listeners, it has been an intriguing time for earnings volatility as well. Still some big names popping off this week. Home Depot on Tuesday, Container Store on Tuesday. Wednesday, we had Target and Jack in the Box for all you West Coast burger vol fans. Cisco and Stone Cold, our old friend. Yesterday, we had Alibaba and Walmart. Today, John Deere and Foot Locker. You want all that data in your hot little hands, hot off the presses from our friends over there at ORATS, and completely for free because we like all you folks. TheOptionsInsider.com. Click on the Options News and Articles tab to sink your teeth into all the latest. We had Baba on there. We had Walmart. We had Stone Cold out there. We had a bunch of them out there. A lot of upcoming tickers as well, including Intuit, NVIDIA coming up next week. That'll be a big one on the 24th. Let's just check them out really quickly right now. As of our last report, they were trading 301 3/4 when we ran the numbers. They were pricing in $21. In the past, they've moved $14.50. So that previous straddle, already pretty rich, now blowing the doors off of it. Again, you could argue it's merited. Look how much this stock has moved. It's just into crazy town now, but that's where we are. We also have Snowflake. Remember them? They're coming up there next week. Costco, Marvell, a whole bunch of others, dozens of other tickers for you. Right now, the overall season average coming in a little bit, down to about a 91%. The long-term average right now is at about a 96. That's going back to pre-pandemic days. So we've been running these numbers for a while. Again, you can check them all out for yourselves because we like you, theoptionsinsider.com. As we keep on rolling, let's get into some of your comments and questions real quick. Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Last week, we asked you folks an intriguing question. Very simple. In these troubled times, where are you allocating the majority of your portfolio? We like to do roughly quarterly check-ins with you folks, see how you're lining up your portfolio. Give you pretty much 4/5 choices: cash, crypto, equities, or commodities/fixed income. And nearly half of you, 45.6%, coming down on the cash side. Equities coming in number 2, 32.4%. Commodity/fixed income, 19.1%. And crypto only getting 2.9% of the love. Mr. Meatball, does that surprise you, sir, that so much of our audience, our options-savvy, volatility-savvy audience, hanging out in cash right now, sir?
I guess that makes some sense. I mean, a lot of people are really worried about everything going on, the headlines. People are worried about a recession. We're seeing that. The stock market, like we talked about at the top of the show, it's really not the S&P that's rallying or the triple Qs, it's 6 stocks. So I think that's a reason why some people are staying on the sidelines.
Mr. Rhodes, same question for you. Are you surprised, sir?
I'm not, on the surface, I would have been surprised, but, about 30, 45 minutes ago, Mark was talking about all these big stocks that are really the ones that have been leading us higher. Those are the kind of stocks that are very popular with the type of folks that are listening to us right now. So I wouldn't be the least bit surprised if the cash on the sidelines could be attributed to profit taking in Apple or Amazon, et cetera. It's like not making a whole lot of sense, seeing that you're up, and I don't know any of these numbers, so I'm just giving a hypothetical here. But seeing that the Nasdaq's up 20% for the year, but your Apple's up 40 or something like that, maybe you take some profits and nothing looks good to you right now. So there you are in cash.
There you are, indeed. We got a YouTube comment coming in from Rockstar. And a lot of you like to listen to the show on YouTube, however you like to get it at the end of the day. Pick your poison out there. He's chiming in on episode 528, a volatility apocalypse. And he just wrote in to say, night trader, night rider, hilarious, great pod like always. Yeah, I think that was the one, Mr. Meatball, we were going on about your whole night trading thing. You remember that?
Oh, yeah. Oh, yeah.
Clearly, Rockstar enjoyed that.
He's the opposite of a day trader. He's a night trader?
Exactly. He's a night trader. There we go. And he also liked our allusions to Knight Rider. So clearly, he's straight in our wheelhouse. He likes our 80s references, a little bit of silly humor. There you go. He's one of ours. So good taste there, Rockstar. I see folks asking Wadams77 in the chat, is this show recorded? Yeah, it is a podcast first and foremost at the end of the day. You can find it, Volatility Views, on every platform under the sun. We were nice this week because it was Pro Q&A 100. We did leave the live stream open for everybody so they could sample it. So you're getting a free taste of what our pro folks get during the week, which is, of course, live access to this show, all the other shows, pro Q&As, options, oddities, all that good stuff. But if you want the podcast content, search for Volatility Views or make your life easier. Just get our Options Insider Radio Network feed. Subscribe to that on any podcast platform or YouTube if you care. And that will give you not just this show, but every show that we do out there. As we keep rolling, it is time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the vol gods, see what they have on the docket for the coming week. And Mr. Kevin not here, and go figure, this is one of his better weeks out there. VOLQ at about a 17.10 when we're ending the show, 1680 for VIX cash. Kevin was at a 17 even in VIX, so not quite a winner, but not quite within our 10th of a point margin of victory. But pretty darn close. I do believe the closest he's ever been. VOLQ 17.5. Not looking bad there either. He was predicting that spread to come in quite a bit, and it has. That spread just collapsing, which is kind of intriguing. I was at an 18.35 for VIX and a 19.20 for VOLQ. No joy for me. Andrew, the Rock Lobster, also looking pretty decent this week. He was at 18 for VOLQ. No joy there. And 17.25 for VIX. I get about 16.85 for VIX now, so he's looking not bad either. No winner chicken dinner for him. A lot of our listeners, Nichols, 17. A lot of you were in that range. Frank, 17.5. Doesn't seem like we have any. Nichols, you're close. Nichols, you're within spitting distance. Welcome to our pain here on the show, listeners. It's a very demanding game we play here at the end of the day. Of course, if you sent in a submission, listeners, our producers will go through, make sure everybody, right at this, not at the end of the day, right now at the end of the show, that's where you have to be within a 10th of a point. If you are, then you will be the winner chicken dinner. So we were all very close. We were all feeling a very tight range. Luckily, none of us had a 15 handle, and luckily we bounced away from that. This one, I was looking at it yesterday. I was like, oh, I'm not looking too good. I needed a little bit of extra juice, and we got some extra juice, enough to at least keep things intriguing, shall we say. All right, that means no winner for this week, so that means our guest gets to go first. Mr. Rhodes, sir, what are you feeling for this time next week? And listen, we can do both again. Let's do VIX and VOLQ. Why not? Keep the fun alive.
Okay. VIX, I think it's going to be, I'm thinking 19. We're going to, hold on. Strike it. I didn't say it. I didn't take my finger off the chess piece yet. We do have a 3-day weekend, so I'm going to say 1775.
A little bit of weekend juice coming out. You're right. We are coming up.
Yeah, I had that in the back of my mind, and then I forgot it when I was thinking that we probably are going to see a floor in VIX over the next few weeks until the debt ceiling thing gets out of the way. So
we'll see. Maybe we already kissed it today. We shall see. What about VOLQ? Anything for VOLQ? Or are you just out on that?
You know what? I'm going to say 1750.
Whoa. An
just
inversion?
For the heck of it, because I don't watch. I just haven't been able to watch day to day like I normally do. But I don't think VOLQ's been below VIX in a while, or at least not for more than a few days, if it has been.
Not as long as we've been doing it here on the show, it has not been, no. So, wow.
And historically, it's about 30% of the time VOLQ's at a discount to VIX. So we're overdue for that.
Oh, look at you calling for an inversion. If it was a crypto show, it would be the flippening. The flippening is happening out there. All right, Mr. Meatball. Wow, Russell throwing the gauntlet down. What you got for this time next week, sir?
Well, the two of them are sitting on top of each other right now. VIX is 1711. VOLQ is 1723. Well, that would make sense because, one, it's at the money vol and we're seeing skew get lifted. Two, the S&P is going to have all those financials, all that ugliness in it, and VOLQ is those 6 stocks. 51% of VOLQ is just derived from those 6 names. So I think you're going to see that inversion if those names continue to carry the water for the market. And we're looking at, I think they're going to, this weekend, we're going to get some sort of a deal done. They're going to come out and everyone's going to shake hands. So when we do the show next week, we're going to be at 1551 for VIX. And VOLQ is going to be a flat 16. But over the week, we will, we may get an inversion today, though.
Could be. And as you mentioned, VIX has continued to tick up a little bit as we were talking. It's at a little north of 1710 right now, which puts us within our 10th of a point margin of victory for you, Mr. Nichols. So it's your lucky day today. So our producers will reach out to you. Fabulous prizes await for you with your 1720 level. Looking pretty good. A little better than it was even a few minutes ago. Shows how fickle this game is, listeners. While the meatball was talking, I did type in my answer, which is, of course, we all know the correct answer for next week. So 16 double on VIX. So actually that works out right in between the other two. How interesting is that? And then VOLQ at about a 1705. So I'm not feeling the flippening yet. Going to keep that roughly half a point distance between. So there's your vol market. Get your prognostications. If you're listening live, get them in now on the live chat. If you're listening after the fact on the podcast, get them in quickly so you two can play. You got to do it by the end of the day today. Otherwise, it's hard to keep it fair for everybody who writes. You can't write in a guess at the end of Thursday of next week for Friday's vol view. That would be no fun. All right, everybody. That music means we have come to the end of this sojourn through the world of volatility. For all you on-demand folks, this will conclude your broadcast week with us. Thanks for joining us throughout the week through this special Pro Q&A 100 episode week. If you are joining us live right now, stay tuned. We'll pump some fun stuff in there. I'll be back in about an hour with the Rock Lobster to hold court on a whole bunch of unusual activity that's been lighting up our tape this week. It's a fun show. It's an intriguing show. If you don't come away from it scratching your chin and maybe saying, I might want to look into that more, maybe trade something, then you're doing it wrong. So stay tuned for that. Options Oddities, always a fun one. Always the way we end the week officially here, at least on the pro side. But before we go, let's go back around the horn. Mr. Rhodes, you're hanging out. It's summertime and the living is easy over there. What, if anything, should our folks pay attention to in the land of Rhodes?
I'll just keep putting stuff up on my Substack like I have been doing, trying to get back to full speed on that. Even though I am an academic, I'm teaching 2 different derivative classes this summer. Woohoo! So,
yay!
Yeah, and out of 2 different books that use 2 different terminologies for everything.
Oh, lovely!
I know I'm a mess.
Are you going to be giving people what I think is the best book, Trading Options for Edge by Mark Sebastian?
Oh, absolutely. I've got a PDF copy I got off of a Chinese server.
Oh, nice.
You're welcome.
Well, some jerk said in Trading Options for Edge, Mark Sebastian shares useful strategies used for professional option traders that will enhance the alternatives for all levels of trader.
That sounds like a jerk.
It does. Yep. And
that has jerk written all over it. Thank God we're not using that to educate the youth of tomorrow. So check out, follow his Substack.
That was Russell Rhoads, by the way.
Yes. So follow Russell on Twitter if you want, listeners, at Russell Rhoads, 2 S's, 2 L's, RHOADS, all one word. He's a fun follow. Substack, all sorts of goodness there throughout the week. And Mr. Meatball, if folks want to follow you on Twitter or on the Land of the Pit, what can they find?
Yeah, go to optionpit.com and check out everything we're writing. We're trying to put out useful trading ideas every single day. I write a blog daily called The VIX Edge. It is worth a read.
There you go. Check them out, optionpit.com. That's going to do it for us on the on-demand side out there, listeners. Back again for all you folks in the live in about a little less than an hour now with Options Oddities. Stay tuned for that. Should be fun. Then back again on Monday with our usual kickoff to the week with the option block, and then our usual assortment of content all the way through to Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.